Have you ever really stopped and wondered what separates the super wealthy from, well, everyone else? It turns out the biggest gap isn't just the number of zeros in their bank account, it's the entire operating system they're running on. It's a completely different mindset, a set of principles that guides every single financial decision they make. So let's crack open this blueprint and see what's inside.
So that's the big question, right? What is the secret sauce? Is it just dumb luck? Did they all inherit it? Did they get some magic stock tip? Well, what we're going to explore today suggests it's none of those things. It's actually something way more fundamental, and believe it or not, a lot more accessible than you might think.
And here's the absolute core of it. While most people, and this is totally understandable, are focused on the immediate goal of just getting more money, a bigger salary, a nice bonus, the wealthy are playing an entirely different game. They are laser-focused on building a specific mindset. It's not about earning more, it's about thinking differently. This is the foundation that everything else we're about to talk about is built on.
Okay, so let's start by laying that foundation. Just like any great building, you need a solid base. And for wealth, that base is all in your head. This first set of principles is all about getting the mental framework right. A framework that's built for the long term, driven by knowledge, and is just incredibly disciplined.
So in this first part, we're going to hit three core ideas. First, the power of having a really long-term vision. Second, why information is literally the most valuable currency you can have. And third, how mastering your own emotions is probably the ultimate financial superpower.
First up is this idea to think in decades. Man, it is so easy to get sucked into the day-to-day drama of the stock market, isn't it? The news, the alerts, all of it. But the truly wealthy, they're playing a different game. They just zoom out. They're looking at the huge picture because they know real wealth isn't built in a day or even a year. It's built over decades. This long-term view lets them just ride out all the crazy ups and downs and let that magical force called compounding really do its thing.
And this quote from the legend himself, Charlie Munger, just hits the nail on the head. It's not about trying to time the market or make a quick buck. It's about finding fantastic businesses and then just having the patience to sit on them for the long haul. You let your money grow and compound and grow some more.
Next up, the wealthy treat knowledge like it's their ultimate secret weapon. These people are relentless learners. They are constantly reading, networking, looking for mentors. Why? Because they know this simple formula is the absolute truth. If you have better information, you make better decisions. And when you compound better decisions over time, you get wildly superior results. What looks like luck to everybody else is almost always just good preparation meeting a good opportunity.
And this right here illustrates the last piece of our foundation, mastering your own mind. The two emotions that destroy most investors are greed and fear. Simple as that. You can see it right here. The crowd gets greedy and buys when everything is sky high, then sells in a total panic when things crash. The disciplined investor? They do the exact opposite. They have rules and systems in place to keep their emotions in check, which lets them act rationally when everyone else is, frankly, losing their minds.
All right, let's move on to part two. Now that we have that solid mindset as our foundation, it's time to fire up the engine of this blueprint. These are the active strategies, the core actions that the wealthy use to actually generate and multiply their wealth. In this section, we're really getting into the mechanics. We'll talk about why owning stuff beats a salary, the magic of compounding, a completely radical rule for how to spend your money, and how to take risks where the odds are just massively stacked in your favor.
Okay, this is a huge one. You have to stop thinking about your paycheck and start thinking about assets. A job, even a really high-paying one, is basically just trading your time for money, and you only have so much time in a day. But assets, things like businesses, real estate, stocks, these are things that make money for you even when you're sleeping. They have unlimited potential. Just think about Warren Buffett's company, Berkshire Hathaway. It's just a giant collection of assets that spit out cash. It's not a job. And now we get to the principle that Einstein supposedly called the eighth wonder of the world, compounding. This is the secret weapon. It's a really simple idea. Your earnings start to generate their own earnings, but the effect over a long period of time is just explosive. It's like a tiny snowball rolling down a very, very long hill, getting bigger and faster as it goes.
Just let that sink in for a second. That's the power of time. Thanks to compounding, starting early with a little bit is so much more powerful than starting late with a lot more money. This just goes to show you that the most valuable asset you have isn't your money, it's your time. The wealthy get this deep down, and they make sure time is working for them, not against them. Oh, this next one is a total game changer. It's the income first, indulgent second rule. Think about it. What do most people do when they get a raise or a bonus? We immediately start thinking about how to spend it, right? New car, bigger house. The self-made wealthy, they completely flip that script. First, step one, they buy an asset that generates cash flow. Then, step two, they use that cash flow to pay for their lifestyle, for the fun stuff. It's such a simple but powerful shift. You let your assets pay for your luxuries, not your own sweat and hard work.
This brings us to a really cool concept, taking asymmetric risks. All this means is making calculated bets where the potential upside is just many, many times bigger than the potential downside. Think about Jeff Bezos when he left his cozy Wall Street job to start Amazon. What was his downside? It was capped, right? He could lose his initial investment and some time. But the potential upside? It was basically unlimited. The wealthy are always on the lookout for these kinds of opportunities, these 1 to 10 or even 1 to 100 bets.
And now for our final section. So you've got the foundation, the engine is humming along. Now the 1% use a set of really advanced strategies to accelerate, protect, and basically future-proof their wealth. These are the accelerators in our blueprint. So here we're going to cover how the wealthy make their finances incredibly efficient, why the people you know can be your greatest asset, and the ultimate goal of it all, building a legacy that lasts for generations to come.
Let's talk about keeping more of what you make. Now, this isn't about tax evasion. This is about tax optimization. The wealthy understand that the tax system treats different kinds of income very differently, so they legally structure their lives using things like corporations and trusts and focusing on long-term capital gains, which are often taxed at much lower rates than a regular salary, just to make sure their money is working as efficiently as it possibly can. You've probably heard this phrase before, but the wealthy don't just say it, they live by it. They strategically build and nurture networks of successful, high-value people. Why? Because the right network gives you access to things that money literally cannot buy. Exclusive investment deals, critical insights, powerful partnerships. Often, these relationships end up generating way more wealth than any single stock pick ever could.
And finally, we come to what might be the most profound principle of them all, legacy thinking. You see, for the ultra-wealthy, it's not just about getting rich in their own lifetime. It's about building something that's going to last for generations. They use powerful tools like foundations, family offices, which are like private wealth management firms for just one family, and complex trusts to protect and grow their wealth long after they're gone, making sure it has a lasting impact on the world.
So, after going through this whole blueprint, what's the real secret? Well, there isn't one. There's no magic pill or secret formula. The real power is just in the incredibly consistent application of these basic fundamentals over a very, very long time. It all boils down to those meta skills. Having the patience to let your plans work, the discipline to actually stick with them, and that all-important fundamental shift in your mindset.
And that really brings us to the final question, and this one is for you to think about. Looking back at everything we just covered, from thinking in decades to letting your assets pay for your life, which one of these principles, if you actually adopted it today, would be the biggest shift for you? Which one is just a single decision, just one little change in mindset, away from changing everything?